What if I told you that the financial playbook your parents gave you is not just outdated, but it is mathematically designed to keep you broke in 2026? You know the script. Go to college, take out the loans, get the safe corporate job, save 10% of your paycheck, buy a house with a white picket fence, and retire at 65 with a gold watch and a pension. It sounds beautiful. It sounds safe. It is the foundational myth of the American middle class. But there is just one problem. The math behind that dream has completely collapsed. Today, a median-priced home in America costs over 7 times the median household income. In the 1980s, it was 3 times. The safe corporate job? It comes with a 20% chance of a layoff email on a Tuesday morning sent by an algorithm or an out-of-state HR rep. And that retirement plan? It is entirely at the mercy of market crashes, sequence of returns risk, and inflation that silently eats your purchasing power alive. The traditional American dream is not just on life support. It is dead. But nature abhors a vacuum, and when one dream dies, another one is born to replace it. Right now, 61% of all Americans and a staggering 69% of Gen Z say they would rather start their own business than climb a corporate ladder. They are opting out of the traditional path. But here is the catch. The internet gurus selling you the new dream of entrepreneurship and hustle culture are hiding the brutal, unforgiving reality of what it actually takes to survive. They are selling you a different kind of trap. Today, we are going to break down exactly why the old path is broken, the hidden traps of the new path, and the exact financial roadmap you need to build genuine wealth and autonomy in this new economy. My name is Guru, and I have spent decades studying the intersection of macroeconomic shifts and personal wealth. If you have ever felt like you were doing everything right but still falling behind, this video is going to change how you see your entire future. Let us start by looking at the autopsy of the old American dream. To understand why 69% of young people are rejecting the traditional career path, you have to understand the economic betrayal that happened over the last 40 years. We need to go back to the post-World War II era. The traditional American dream was born out of a very specific, historically anomalous set of circumstances. The rest of the industrialized world was rebuilding from rubble. The United States held the majority of the world's gold and manufacturing capacity. The government subsidized the middle class through the GI Bill, massive infrastructure projects, and a tax code that encouraged corporate reinvestment over stock buybacks. For about 40 years, from 1940 to 1980, productivity and wages moved in perfect lockstep. If the company made more money, the workers made more money. The social contract was simple. You traded your time and loyalty, and in return, you got a slice of the pie. But in 1971, the fundamental mechanics of the American economy shifted. The gold standard was abandoned, fiat currency was unleashed, and we slowly transitioned from a stakeholder economy to a shareholder economy. The financialization of America began. Pensions were replaced by 401ks, shifting the entire risk of market downturns from the corporation onto your shoulders. Meanwhile, the cost of the 3 pillars of the American dream, housing, healthcare, and higher education, did not just rise. They decoupled from inflation and exploded. Let us look at housing, because this is where the dream truly died for the middle class. According to data from the National Association of Realtors and the U.S. Census Bureau, the median home price in 1980 was around $47,000. The median household income was around $17,000. That is a ratio of roughly 2.7 to 1. You could pay off your house in a few years on a single salary. Fast forward to today. The median home price has skyrocketed past $400,000, while median household income has crawled to roughly $75,000. But it is not just inflation that caused this. It is the institutionalization of the American neighborhood. Over the last decade, massive private equity firms and institutional investors have bought up hundreds of thousands of single-family homes. They turned the foundational asset of middle-class wealth building into a yield-bearing financial instrument for Wall Street. You are no longer just bidding against another family trying to find a place to live. You are bidding against a multi-billion-dollar algorithm that calculates the exact maximum rent it can extract from that zip code. You are taking on a 30-year mortgage that consumes 40 to 50% of your take-home pay. This locks you into a state of permanent financial fragility.
You cannot take career risks when a single missed paycheck means foreclosure. And what about that safe corporate job you were chained to? The idea of the company man is a relic. The average worker today changes jobs 12 times in their career. The loyalty premium is gone. In fact, data consistently shows that employees who stay at the same company for more than 2 years get paid 50% less over their lifetime than those who switch. So the old dream tells you to buy a massive liability from a Wall Street firm, chain yourself to a job that does not reward loyalty, and hope the stock market does not crash right before you turn 65. Is it any wonder that people are looking for an exit? This brings us to the new American dream. If the old dream was about stability and physical assets, the new dream is about autonomy, leverage, and ownership. The data is undeniable. A recent survey showed that nearly 70% of Gen Z views entrepreneurship as the ultimate path to financial freedom. This is not just youthful rebellion. It is a highly rational economic response to a broken system. Gen Z has watched their parents get laid off via Zoom after 20 years of service. They have watched inflation eat their parents' savings. They are staring down a national debt that exceeds $34 trillion. They understand that the government's only historical solution to unpayable debt is to debase the currency. They understand that renting out your time to a single employer is actually the riskiest thing you can do. This is because you have a single point of failure. If that employer cuts you, your income goes to zero instantly. The new dream is about building a portfolio of income streams, owning equity, and decoupling your time from your earning potential. It is the shift from being a wage earner to being a capital allocator. But here is where we need to inject some serious reality.
The internet is flooded with 22-year-olds in rented Lamborghinis telling you that starting a business is a get-rich-quick ticket to freedom. They call it the creator economy, dropshipping, SMMA, or SaaS. They sell you the idea that you can work 2 hours a day from a beach in Bali and make 6 figures. This is the entrepreneurship trap, and it is just as dangerous as the corporate trap, but it ruins you much faster. Let us look at the real numbers. According to the Bureau of Labor Statistics, roughly 20% of new businesses fail in their first year, and 50% fail by year 5. But that is just the survivorship bias talking. The real cost of entrepreneurship is not just the money you invest. It is the opportunity cost, the psychological toll, and the hustle tax. When you start a business, you do not work 2 hours a day. You work 80 hours a week for the first 3 years, often for less than minimum wage when you calculate your hourly rate.
You are the marketing department, the sales team, the customer service rep, and the janitor. The gurus do not show you the panic attacks at 2 a.m. when a client demands a refund. They do not show you the months where your revenue does not cover your software subscriptions. Furthermore, the barrier to entry for digital businesses has dropped to 0, which means competition has skyrocketed. With the rise of AI, the internet is being flooded with automated spam, making customer acquisition costs higher than ever before. When anyone can start an e-commerce store or an agency with a laptop and a Wi-Fi connection, the profit margins get compressed to razor-thin levels. You are entering a hyper-competitive arena where the top 1% capture 90% of the profits, and the rest fight over the scraps. The people making the most money in the make money online space are the ones selling the shovels during the gold rush. These are the course creators, the software affiliates, and the event organizers.
So if the old dream is a mathematical trap, and the new dream, as sold on social media, is a psychological and financial meat grinder,
What is the actual solution? How do you build wealth and autonomy in 2026 without blowing up your life? The answer lies in a strategy I call the asymmetric bridge. You do not jump off the corporate cliff to start a business with zero safety net. That is not bravery. That is financial suicide. Instead, you use the old system to fund the new system. The asymmetric bridge is about maintaining your W-2 income, but radically changing how you treat it. Your day job is no longer your identity or your long-term career path. It is your angel investor. It is the venture capital firm that funds your transition to the new American dream. Step 1 of the asymmetric bridge is aggressive financial decoupling. Most people get a raise and immediately upgrade their lifestyle. They buy the newer car, they move to the bigger apartment.
This is lifestyle creep, and it is the chain that keeps you locked to your job. To build the bridge, you must freeze your living expenses at your current baseline. Every single dollar of every raise, bonus, or side hustle income must be diverted into a freedom fund. This is not a standard emergency fund of 3 months' expenses. This is a war chest designed to buy back your time. You need enough liquid cash to cover 12 to 18 months of your bare-bones living expenses. This fund is what gives you the psychological safety to take calculated risks. When you have 18 months of runway in the bank, you stop making decisions out of fear. You can walk away from a toxic boss. You can invest in a business idea without the desperation of needing it to pay next month's rent. Step 2 is acquiring high-leverage skills on the margins of your day. The traditional education system teaches you to be a specialist, a cog in a machine. The new economy rewards generalists who understand how to connect the dots and apply leverage. As the investor Naval Ravikant famously said, you must productize yourself. You need to understand the mechanics of digital leverage. This means learning how to build audiences, how to write persuasive copy, how to automate workflows using AI, or how to analyze data to find market inefficiencies. These are skills that have zero marginal cost of reproduction. Code and media are the new leverage. They work for you while you sleep, and they do not require permission from a gatekeeper. You spend your evenings and weekends building these skills, not by consuming endless tutorials, but by building micro projects. Start a niche newsletter. Build a simple automation tool. Offer to solve a specific painful problem for a small business owner for a fraction of what an agency would charge. You are buying real-world data and building a track record. Step 3 is the transition to equity and ownership. Once your micro projects start generating even a few $100s a month, you have proven product market fit. Now you begin to shift your risk profile. This is where the barbell strategy comes into play, a concept popularized by risk analyst Nassim Taleb. On one side of the barbell, you have extreme safety, your W-2 job and your massive freedom fund. On the other side, you have extreme upside, your scalable, leveraged side business. You completely avoid the middle ground, which is taking on massive debt to open a physical franchise or quitting your job to trade crypto. You stay on the safe side until the upside side generates enough consistent cash flow to replace your baseline living expenses. Only then, and only with a clear, data-backed transition plan, do you walk across the bridge and leave the traditional path behind. But let us go deeper into the psychology of this shift. The biggest barrier to the new American dream is not financial, it is social. When you stop playing the old game, people will think you are crazy. Your parents will ask when you are going to get a real job with benefits. Your friends will judge you when you decline the expensive group vacation because you are reinvesting your capital into your business. You will experience intense status anxiety. The philosopher René Girard wrote extensively about mimetic desire, the idea that we do not actually know what we want, so we simply copy the desires of the people around us. The old dream provided a very clear, socially validated scoreboard: the size of your house, the brand of your car, the title on your business card. The new dream requires you to break free from mimetic desire and build an internal scoreboard. You have to find deep satisfaction in owning your time, in having a margin of safety,
and in building assets that work for you while you sleep. You are trading the appearance of wealth for actual, unshakable financial sovereignty. Let us look at a real-world example of how this plays out. Consider a 30-year-old marketing manager making $80,000 a year. Under the old dream, she takes out a massive mortgage on a 3-bedroom house, finances a new SUV, and maxes out her 401k, hoping the market cooperates for the next 35 years. She is stressed, her time is entirely owned by her employer, and a single layoff would devastate her.
Under the Asymmetric Bridge strategy, she rents a modest apartment, drives a reliable used car, and lives on $40,000 a year. The other $40,000 goes into her Freedom Fund and into building a niche consulting business, helping local dental practices automate their patient booking using AI. For the first 2 years, it is a grind. She works her day job and spends her nights building her systems. But by year 3, her consulting business is generating $5,000 a month in recurring revenue. It requires only 10 hours a week of her time because she has leveraged software to do the heavy lifting. She now has a W-2 income, a growing business asset, and a massive cash reserve. When her company announces a restructuring and offers her a severance package, she does not panic. She takes the severance, adds it to her Freedom Fund, and steps across the bridge to full-time entrepreneurship. She does this not out of desperation, but from a position of absolute power. This is what the new American dream actually looks like.
It is not about working 80-hour weeks until you burn out. It is not about flexing rented wealth on social media. It is about building a fortress of autonomy. It is about decoupling your time from your income, owning equity in your own endeavors, and creating a life where you dictate the terms of your engagement with the world. The traditional path was built for an industrial economy that no longer exists. It was designed to create compliant workers, not free individuals. The system is not broken. It is functioning exactly as it was designed, extracting your labor and your capital to enrich those at the top who own the equity. The only way to win is to change the game entirely. You have to realize that affordability was the defining financial crisis of 2025, because the old markers of success have become luxuries reserved for the top 10%. But the digital economy has democratized the ability to build leverage. A single person with a laptop, the right skills, and an understanding of digital distribution can now build a $1 million enterprise. This is an enterprise that would have required 100 employees and a brick-and-mortar footprint just 15 years ago. The tools of production are no longer locked behind corporate gates. They are in your pocket. The question is whether you have the discipline to use them to build your own bridge, or whether you will continue to wait for a pension that will never come. The American dream is not dead. It just changed its address. It moved from the suburbs to the cloud, from the corporate boardroom to the individual creator, from renting your time to owning your leverage. The transition is not easy. It requires a level of discipline and delayed gratification that most people simply do not possess. But for those who are willing to see the matrix for what it is and build their own exit, the rewards are limitless. If this video shifted your perspective on your career and your financial future, you need to understand the exact mechanics of how to protect the wealth you are about to build. Because making money is only half the equation. Keeping it from being destroyed by inflation and hidden taxes is the other half. Click the video on your screen right now, where I break down the wealth fortress strategy that the top 1% use to legally shield their assets and never lose their financial freedom. I will see you over there.